Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, let's just take a look at what, as we're in the holiday season and we're quickly approaching the end of the year. As I'm doing this video today, it is December 27th. I'm just going to talk about not necessarily what's going to happen here as we close off this year, because I'm not really worried about it. But on an hour-to-hour basis, this video is just going to be about what I think is coming up, okay? So obviously, there's been a very strong move in the stock market here, right? You can see we've hit all-time new highs today, which today is, forgive me as I go look at my phone, Monday, December 27th, and I'm doing this video about 2:30 Texas time here in the United States of America. Okay, so nice all-time new high. Very strong, obviously, right? So, but let's talk about these daily cycles, guys and gals. So what am I talking about? I'm talking about, these green cycles, which is the longer of the two daily cycles. And you can see them right here, okay? And then we have some shorter cycles in here. These are the red ones, okay? And I took a look at this last night. I got a lot going on right now, guys. I got a lot going on. If you haven't checked out their premium membership, take advantage of it. $5.99. It's a really good deal, guys. Okay, and you get a link to the Discord server, and you get to join a lot of other traders. But there's other channels on the Discord server, guys and gals. I track solar cycles on there, okay, which is a very interesting study. It affects grains, it affects cattle, it affects the entire earth. Very interesting. Okay, I also have a fixed income channel on there. So occasionally I'll talk about corporate bonds or dividend stocks. There's a lot going on that you're not going to get in this video that I don't share with the public, okay? So $5.99 is a steal. I mean, it's super cheap. I kept it cheap so everybody could afford it, okay? All right, so back to the video. Now looking at this big green cycle right here, okay? So that cycle, this one right here, it was projected to end on December 27th. Okay, hang on, let me look at this, because I may have to make an adjustment. This cycle could be off because I made some changes last night, and I'm just looking at this. Yeah. Okay, when was this one supposed to end? The 22nd, okay? And that's the 20th, this candlestick right there. Okay, so this little red cycle, which is like a 15-day cycle right now, okay? These guys. That one I had projected to finish on the 22nd. Well, this candlestick came down on the 20th and met the low. That's really good, guys. That means this cycle within a day or two is really good, okay? We don't mind it being off by a day or two. That's perfectly acceptable, okay? So this cycle, the next one, which is the smaller of the cycles, is the one we're focusing on for a second, not the green one. My apologies. Okay, that one's got January 13th. Okay, so we could expect potentially the price stalling or doing whatever, okay, and possibly coming down around January 13th. Okay, but the real powerful one would be when this green cycle and the red cycle end approximately at the same time. So that would be over here. Okay, we could get a big price decline into this January 13th time frame. Could definitely happen. The first week or two of January could be a big price decline. That could definitely happen, okay? But generally speaking, when we get these two type of daily cycles that come together, so there's one that ends on February 7th and there's one that ends on February 3rd. Now that would be a greater probability of the price coming down wherever it is. I don't care if it shoots to the moon. I don't really care about all-time highs, guys and gals. I don't get excited by all-time highs. Okay? If I do get excited at opportunity. This is clearly opportunity. This is clearly opportunity. Okay? I don't get into the bull bear nonsense. I just get into opportunities, okay? So if you're wise, in my opinion, because this is all opinion, Get excited about opportunity. Don't worry about bull, bear, up, down. Just take advantage of the market gives you, okay? So anyway, back to this. Guys and gals, here's what I think. I think there's an opportunity for price to come down and going into like the first week or two of January, okay? Especially that second week, looks like there's a really good opportunity or a possibility, probability the price will come down. But I think the bigger probability is going into like February 3rd through like, let's say February 8th. Right in that area right there, okay? That's where I think you could see a more significant price decline, okay? Okay, let's switch over to the monthly, and I want to show you something here. Or you know what? Let me go to the weekly. The weekly is the one I want to focus on here. Let me switch my drawing set to weekly, okay? So what am I talking about? Well, these are the same arcs, or I should say this is also cycle analysis, okay? And these cycles, instead of being, I'm just having blue here, light blue instead of red and green, okay? These are in a weekly time frame rather than a daily time frame, okay? And to be honest with you guys and gals, the stock market, the S&P 500, and specifically the weekly cycles, they're not that great. They don't stand out as much, okay? They're not as obvious, but they are there, okay? So let's look at them. Now we can tell way back over here, like this was the week of March 16th. Let me just look at this cycle way back here during the pandemic. Okay, March 15th, the week of March 15th, 2020. That's this way over here. Okay. So those cycles right now, just I'm picking out cycles that make the most sense as I'm looking at these cycles very closely. They're 16 weeks long, okay? So you can see all these cycles here as they go along, right? And every 16 weeks, looking at these cycles, okay? So let's just take a look at them really briefly here. This was the pandemic, whatever you want to call it. By the way, as I mentioned earlier in this video, this big event coincided with the solar minimum. Okay, if you're not familiar with solar cycles, okay, I'm not going to give a whole lesson on it right now, just very briefly. This event coincided with the weakest part of the solar cycle, 11-year solar cycle, and during one of the weakest solar cycles we've had in decades. Okay, not a coincidence. Okay, $5.99, take advantage of it, learn more. Okay, so anyway, did the price decline right here? Yeah, it did. Did it decline fairly close to this solar cycle? I'm sorry, not the solar cycle, but this cycle analysis cycle low? Yeah, it did. Look, here's another one. And here's another one. And here's one, this candlestick here. And here's one, these candlesticks here. Okay? Now, they're not always perfectly right on because cycle analysis isn't about being absolutely perfect. It's about getting it really close. Okay? So resist the temptation to expect absolute perfection. Okay? That's not how the cosmos and cycles work. Okay? We're just trying to ballpark it. And we could take advantage of those ballpark figures. Okay? And make really good trades based on it. Okay? All right, so with that being said, this cycle, let me get the mouse to play nice with this cycle, is projected for January 16th. I like them apples. January 16th is the weekly cycle low right here. Now, why is that a big deal? Because remember, on the daily cycle, if I'm not mistaken, let's go back to daily cycle, and we'll stay with me on this. We switch to daily. Clear the screen. That's February. There it is, January 13th. Right there. So these small red cycles, these 15-day cycles, they're projecting a low January 13th. Okay? On the daily. Remember that, January 13th on the daily. Let's switch back to the weekly. January 13th. Right? Just keep repeating that to yourself. January 13th. Let me switch to the weekly. Okay? What is this cycle low on the weekly? January 16th. So guess what? That is really strong to have both the weekly cycle on January 16th and the daily cycle on January 13th to be that close within 3 days of each other. Okay? Now, we always, and I haven't talked about this in a while, but I'm going to mention here because it's really important. We don't trade blindly on cycles. We wait for confirmation. So right now, there's a lot of evidence from a cyclical or cycle analysis perspective that the first week and a half to third week of January, second or third week of January, there's a lot of cycle evidence, okay, cycle analysis suggesting that there could be a significant decline there, okay? But we're not going to trade just on forecasting and prediction, okay? We're going to trade on forecasting and prediction accompanied by, very important, confirmation. So what is confirmation? Okay, well, you're looking for red candlesticks, especially on the daily and the hourly, but especially on the daily, okay? So we come here and look at the weekly, and we now know that January 16th on the weekly is an expected cycle low, and January 13th on the daily is an expected cycle low, okay? And then we wait for confirmation. Now you got to understand, when we start getting into large time frames like monthly and weekly, those things can really move around, okay? There's also some strong suggestion that February, like early part of February, that first week or week and a half of February, it looks like the two daily cycles come together. Okay, that short red daily cycle we looked at with the green daily cycle, which is a longer one. Okay, one's at 15 days, one's at 30 days. Some say 29 days. That's okay. We're all talking the same stuff for those of us that do cycle analysis, okay? We're all right in the same ballpark, okay? And that's really important. So we may get a strong event here coming into the second week of January, and we may get a strong event somewhere about the first week of February, okay? I don't really care when it happens. I just know that there's something in the wind, if you will. The cycles are showing something could potentially happen here, okay? And today this thing is monstered up to all-time new highs. That's great. Let it do its thing. Heck, take advantage of it. I'm not trading right now because it's the holidays. I got other things going on. Okay, whatever. Okay. But I'm still going to put out videos and help you guys and gals out there to help make better decisions, right? Right now, I'm holding ARLP stock and I'm holding some corporate bonds. That's all I got going on. Okay. But I see a significant event, and how significant will be determined by confirmation. What is confirmation? Okay, red candlesticks. Let's go back to the daily chart. Okay, we're not going to talk about monthly right now. We're just going to talk about weekly and daily. So what would be confirmation? Well, we haven't talked about the Big Daddy in a while, but we may be soon. If this Big Daddy right now, which is at 358, what everybody wants to know, some of you probably don't know. What am I talking about? I'll talk about this number right here. This is my own predictive, forecastive indicator. We're looking at that number 359 right now. This one right here. If it gets up into the 400, guys and gals, especially like 420, 430, it gets up in that area, especially 440, 450. If it gets that high, then we got something going on, okay? But it isn't there yet, so no reason to talk too much about it. But we'll keep an eye on it, okay? So that would be one thing we want to watch. Let me switch the drawing chart back to daily so nobody gets confused. Okay. So we're talking about this time frame right here, okay, which is about January 13th or February 3rd through like February 8th or 9th. Okay. Okay. So you can pause the video and take your screenshots or whatever you want to do. I don't really care. Write it down. All right. So we'd be looking for Big Daddy, and for those that want to know what that is or you want to keep track of it, you have to watch my videos, okay? No, that's not clickbait. I'm just saying it like it is, all right? The other thing you can watch is you want to watch your SMI, Stochastic Momentum Index, okay? If it starts getting like that and starts rolling over, okay, then you know something's going on, right? You start seeing, look, it's obvious, right? That kind of stuff. That's what you're looking for. Also your MACD, which right now looks like it's trying to shoot to the moon. But remember, the MACD is going to be slow to respond. But if this thing, you obviously want to keep track of it, right? If it does one of these and it begins to come down again and pinches together, okay, well, you want to pay attention to that, okay, like that kind of event. We may not get that. Time will tell. All right. So let me just finish up this video. So now you know the dates, and just because I really just focus on cycle analysis mostly and some basic indicators, how to watch and kind of, keep an eye on things, okay? So let's just talk more about, well, what do I think in the coming days? What's my sense of candlestick behavior and things like that, okay? So very common, usually you get this strong run up like this, then you'll see a stall somewhere. It may be way up in here. I have no idea. It may happen sooner than later, whatever. Okay. So this middle of this little cycle would be January 4th. Right around there, okay? So it could be a few days earlier, a few days later, doesn't matter. I'm just talking about this little red cycle right here. And I'm talking about right in the middle of that cycle, right there, like the 3rd or the 4th of January, right after the New Year's, guys and gals. So we could see prices stall right there on January 3rd or 4th, or even prices could start coming down. Okay. And the other thing you want to watch is for about the middle of this cycle, which would be like January 18th. Okay. Sometimes we'll see prices come down into that or stall. Okay. So it'd be typical to see that. So let's take a smaller event like this event back here. See how it came up and then stalled for like 3 days? See that? So it'd be very typical to see this run up and then the candlesticks kind of run out of energy and track sideways. Okay? At some point that'll happen. Even this, look at this one right here. It ran up, and see those 3 candlesticks right there? It just tracked sideways for 3 days. This one ran up, and then you got 2 days that did that. This one ran up, and then it tracked sideways for like 3 or 4 days. Okay. Very, very common to see that, just talking basic candlestick behavior and price action, okay, on a daily basis. Look at this one, ran up, tracked sideways. This one did too, ran up, and then look at these days right here. They got small candlesticks and track sideways. Very common to see the momentum kind of exhaust itself, and then it'll sit like that for a few days, and then it'll take off again. So I expect that to happen, and you want to keep your eye out for that. You'll see some small candlesticks start to show up. Okay, and then it'll track sideways. And at the earliest I think that would happen would be like January 3rd or 4th. You can start to see that kind of thing going on. Okay. This is crazy season, right? Where I don't want to talk too much about market manipulation because clearly that's been going on for a long time. Okay. So that's my take, guys and gals. Just kind of more of a cycle analysis perspective on what I think is going to be happening in the marketplace, okay? I'm not one of these, the market's going to crash guys every day. The clickbaities. Hey, clickbait me, CB. Clickbait. Clickbait me, every day's a crash. Give me a break. This look like a crash to you? It's not a crash. If this price was way down here, and the 50-day moving average was doing that, okay, now we talk about big corrections and crashes. Okay? So now I'm going to finish up this video by switching back over to weekly. We're just going to look at kind of a long-term thing going on here. We switch my drawing set over to weekly. Okay? Let's scroll to the right a little bit here. And let me look at this one here. January 16th. Okay? Which is right there. Okay? Week of January 16th is right there. So you can see it's only a couple candlesticks away, right? So that cycle, weekly cycle, ends right around January 16th, give or take a few days, whatever. So that's like over here, right? Whatever it is. Okay. So what's the next one after that? And of course, forecasting that far out gets a little shaky, but May 8th. Okay. So that's huge. 16 weeks, which is about 4 months. 4 times 4 is 16. So give or take 4 months, okay? 4 or 5 months, somewhere around there. So I'm not going to get into forecasting. Is it going to big drop, blah, blah, okay, just yet, okay? So that's the cycles for the weekly. And even though I said we weren't going to look at the monthly, I don't have a monthly on here, so ignore these arcs. They're weekly, so just ignore these arcs. They have nothing to do with the monthly chart. Ignore them, okay? So I'm going to bring in, and we're going to, I know I said I was going to finish up the video, but I'm going to bring in the amplitude percent indicator. Get it down here. Okay. Now, so what am I focusing on right now? As a matter of fact, let me zoom all the way out. I just want to take a look at something here. Give me a moment. All right, so here's the all-time high of amplitude percent, right over here. That was April of 1998. What is amplitude? Whoops, grabbed the wrong thing. What is that all about? That's simply the distance. Okay, so now that you see that this is the all-time high way over here, and I'll tell you what for those that don't know, the uninitiated. Okay, amplitude percent. Let me just draw a line over here. That's kind of obvious. Okay. So that's the all-time high right there of amplitude percent. You can see there's a peak here. There was a peak over here. This is whatever that is, like 2007. This is like 2014-ish. And now here we are over here. Okay. Okay, that must be, what is that, 1987? The stock market crash in 1987? Yeah. Okay, obviously there was one over there. Maybe that one's a little higher. Let's see, when was that one? Now it's a little bit lower, 33. Okay. All right, so there was one over here too, obviously. So what was the all-time high of amplitude percent? Well, it was about 36.92. Okay. What am I talking about? I'm talking about this number right here. This number, this red number. Just look at that. 36.92. Okay. That's the all-time high. April of 1998. Okay. Now that we know we're talking about 36.92, let's zoom back into where we're at today. Okay. Monthly chart. Okay. So what is amplitude percent? That's very basic. The distance from the bottom of the candlestick, meaning if it has a lower wick, okay, the lowest part of the candlestick, in this case the lower wick for the month of December, would be right there. Okay. And that is the distance from that point all the way down to the 50-month moving average. Okay? So there we are. That's this distance. Just measure that line. That's what this thing is doing. That's all it's doing. Very simple. Now, is it a big deal? Yeah, it's a big deal. And why? Because where we're at right now today, as we blast the all-time new highs, we're at the third, forgive me for trying to do this with the mouse, third highest all-time high for amplitude percent, or third largest or greatest distance between the bottom of a candlestick and the 50-month moving average. 1998 was the highest, 1987 was the second highest, and today is the third highest. So 3 times since 1987. This is the third largest distance. Okay, now that we've talked about that, why is that a big deal? Let's look at the 50-month moving average. Right now it's 3267. Okay? We're at 4776. Okay? Let's zoom out one more time. I know it's kind of hard to see, but bear with me on this. So where's 1987? Well, it's way over here. It's kind of hard to see. I'm not going to get into it, but just trust me when I say that when this big old thing happened, the prices came down and it touched the 50 or went below it. Okay. Here in 1998, they came down significantly. They didn't get all the way down to the 50, but they came down. Okay. The year 2000, which also had a pretty high amplitude percent, which, to be honest with you, the year 2000 was just a continuation of 1998. And look what happened. It blasted through the 50-month moving average like it was, like the bottom fell out. Okay? And remember, we talked about this peak here. What did it do? It blasted through the 50-month. Okay? Here's a peak over here in 2014. What did it do? Come down and touch the 50-month. Okay? This was the pandemic. Okay? All right. So now that we see throughout history since 1987, whenever amplitude percent spikes up, it makes a significant move at some point, not too far removed from these spikes. Then what happens to the stock market? Well, it makes a big move down. Okay, remember we're talking about a monthly time frame. So these are long time frames. Sometimes happen for years. All right, so third highest amplitude percent. Again, 3267 is the monthly average. So, finish up the video with this. What do I think is going to happen? Well, the stock market at some point will come back to this moving average. Okay? Maybe it happens in 2022. Maybe it happens in 2023. Okay? It doesn't really matter when it's going to happen. The point is it will happen. Okay? And right now the difference between these two is about 1,500 points. All right. So this is it. Finish up the video with this very last thing. My take on the stock market is we will have a 1,000 point decline in the stock market or greater. I don't think it's going to all happen on one day or 1 week, but it's going to happen. The stock market will lose over 1,000 points, and you can bank on it. It happens every single time. We just saw the chart. The stock market will not be able to stay above that 50-month moving average indefinitely. And I don't care when it happens. We will have all the evidence we need to know when it's happening. It'll be obvious. Okay? There you go. Happy post-Merry Christmas, everybody. Yes, I believe in Jesus. Proud of it. Christmas is about Christ. If you don't like it, that's okay. Don't watch my YouTube channel. Happy New Year's, everybody. Happy trading. Talk to you all real soon again next time.